Hey everyone, this is Elijah K. Johnson with Liberty and Finance, and we are live with Steve Penny from SilverChartist.com. Steve, thank you so much for joining us today.
You bet, Elijah. Thank you so much for inviting me on.
Definitely. It's great to have you, and it's great to have you back on the show. We really enjoy when you give us, technical analysis and just your analysis of the markets. And if people would like to support this channel and also hear more about all your work you're doing and really the strategy that you're doing on silverchartist.com, where you get expert technical analysis on gold, silver, and uranium stocks. And it's so cool because everyone is able to see exactly what your portfolio is and all the buy and sell trades that you're doing. So that's SilverChartistLiberty.com. They can sign up for that and also support our channel by doing that. So Steve, once again, thank you so much for joining us today. And we'd really like to get an update on the silver market because, we've seen this silver squeeze, and we've actually seen from the silver squeeze, or it at least coincides with the silver squeeze, quite a bit of a rise in the price of silver really since the beginning of April. But actually, also the beginning of May, we've seen quite a rise as well. So what do you make of the current price action in the silver market?
Yeah, it's certainly encouraging. And what I really like to see is that the first part of the precious metals complex to break out was GDX, the senior gold miners. So that's very typical. Big money institutions pile into the senior gold miners first. Then we saw gold break out. Now, just last week, we saw the junior gold miners break out above their 200-day moving average. So typically what happens is silver follows suit. So this is really encouraging price action that we see in silver. And of course, the big hurdle to get above in silver before we can get really excited is $30. And if we want to be really specific, it's $30.35. Remember that number because that was the spike high on the last silver squeeze push on February 1st. And I think once we get above $30.35, we could really see some fireworks to the upside in silver.
Now, if you'd like to share your screen and kind of walk us through where we are in silver and kind of some of these price points, you mentioned $30.35.
Yeah, absolutely. Let me go ahead and pull my screen up here for you. And just confirm you can see it okay.
Correct.
Yeah. All right. Yeah, and I've got several charts here, but I'll zoom down to the silver one specifically. And what I look for, I like to keep technical analysis very simple. Once you mention technical analysis, a lot of people, their eyes glaze over and they kind of lose interest. And a lot of people also say, technical analysis doesn't work in a manipulated market. Well, I would beg to differ, and I try and keep my charts and my technical analysis very simple. And I try and put the lines and the indicators on there that the banks look at. So I think Craig Hemke coined the term manipulation analysis, and that's kind of how I think about this as well. So when I look at this silver chart right here, this blue line here is the 50-day moving average, and this yellow one is the 200-day moving average. Those are very significant when price is trading above a rising 50 and 200-day moving average, as that puts those bankers in kind of a buy the dip mode. So we're bullishly postured here in silver. And then you can see right here, going back to August of 2020, we peaked at $29.92. And then this past February, we peaked at $30.35. So that formed this big double top pattern, they call it. So that's going to be stiff resistance. Getting through there is going to be tough, but I obviously think we're going to do it. I'm very bullish on the metals. So that's the big level to watch as far as resistance. And then support, I would look for this 50 and 200-day moving average down around $26 to be really strong support if we do see any kind of pullback.
Now, right now, what we're seeing is a little bit of a pullback from what we saw last week of gold breaking that $28 level. But it doesn't seem like from your analysis that this little pullback we've seen, this dollar or 50 cents to a dollar, is really any concern.
No, none whatsoever. And if you guys can see the screen here, there's this little green uptrend channel that goes back to the beginning of April. So it's almost 2 months now, or 6-7 weeks, call it. And every time prices pulled back to this green line right here, we've bounced. Well, late last week, we pulled back, tapped that line. Now we're bouncing again. Now, these kind of channels that are really narrow and short term, they don't last forever. So eventually, either we're going to break through the resistance on the upside or support will fail. But, if this support fails, that's your initial support level. And then below there, you've got these moving averages down around $26.
Fantastic. And once again, for our viewers just joining us, we're with Steve Penny, an expert technical analyst from SilverChartist.com. He keeps track of gold, silver, and uranium stocks. And actually on his website, he essentially, if you sign up for his newsletter, you can see all his trades that he's doing. Again, expert technical analysis there. And the link is Silver Chartist Liberty to sign up there and also support our channel. Now, with respect to gold now, if we wanted to turn to gold, what are you seeing technically there?
Yeah, you bet. And by the way, thank you for mentioning the website. And that is a free letter, and it's silverchartistliberty.com. And you might say that sounds like a weird domain. Well, we set up a special link just for your viewers. That's why it's silverchartistliberty.com. But yeah, turning to this gold chart, this is really significant right here. This is really important. Everyone should see this. This is a weekly chart. So each one of these candles right here represents 1 week's worth of trading. And this is very clear and obvious technical analysis. Again, you can see very clearly this downtrend channel that goes back to August of last year. We've been locked right in that downtrend channel. And then what happened last week? Boom, we popped right through that resistance for the first time in almost a year. And then whenever we get a breakout, my eyes like to go right to the bottom of that chart to see what the volume looks like. Because if you get above average volume on a breakout, that just adds confirmation that the breakout is valid. So this is very significant. Now, does that mean we go straight up from here? No, of course not. So I think, I'm looking for a series of higher highs and higher lows going forward. And just as a baseline scenario, I think if we had an 8-month downtrend channel, it might be reasonable to expect we see symmetry on the way back up. So that would mean if it took 8 months to pull back, it might see 7 or 8 months to get back towards that 2089 high. And, that's not something a lot of silver and gold enthusiasts want to hear. But I try and set my baseline targets, very conservative, knowing that we could see a spike higher at any time. That wouldn't surprise me at all. But just looking at this chart, my baseline assumption is that we get back towards these new all-time highs or testing them, perhaps in the fall or later this year.
Now, if we do see that testing of the new all-time highs, kind of what's the next price points after that you're looking for gold to rally to?
That's such an important question, because a lot of people think when you break out to a new all-time high in something, people get nervous. Retail investors do anyway. They tend to, because they think, it's too expensive. We're due for a sell-off. Well, actually, the opposite is true. Whenever a stock or commodity breaks out to a new all-time high, that's very bullish from a technical perspective, as there's now no more overhead resistance. They call it blue skies above. So once we get above $2,089, I think that's going to signify the next phase of this bull market, not necessarily like any kind of short-term top or anything. Getting through that 2089 level will be very bullish.
Now, we have one viewer asking the question, which component of precious metals, of the precious metal complex, is the most undervalued right now?
That sounds like a Silver Chartist member, because I talk about that a lot. Yeah, so right now, if you look at a ratio, I like to look at ratios of junior silver miners versus junior gold miners, senior gold miners, senior silver miners, and then against the metals themselves. And just like to see what component is the most undervalued. So if you've got a longer term time horizon, if you look at a long-term chart, it's junior silver miners. They're by far and away the most undervalued component. However, if you look at that ratio, these ratios, it's come down really far, really fast over the past year. So it wouldn't be all that surprising to see perhaps the junior gold miners maybe outperform just a little bit here in the short term. But if you've got a longer term time horizon, the best risk reward setup is in the junior silver miners.
Now, I guess one other question would be, what precious metal then itself, right? The metal itself, do you think is most undervalued right now?
Yes, if you look at the gold silver ratio, we peaked at like 123-1 back in March of last year. And that was an all-time record high, like going back forever, as long as records are kept. So that was an extreme. And we've come down to a low of about 65-1 on the gold silver ratio. So from peak to trough, silver has almost outperformed gold by a factor of 2. But historically in bull markets, that ratio bottoms about 15-1. So currently we're around 67, 68-1. So it would be reasonable to expect silver to outperform gold by at least a factor of 4 over the rest of this bull market. And then if you want to include platinum in there, I mean, that's really more of an industrial metal, but platinum is also very undervalued relative to gold. And, I've been accumulating a little bit of platinum myself.
Now, with respect to kind of the miners again, you talk about in your newsletter, and this viewer's obviously again newsletter subscriber here, but they're wanting to know, the specific question here is, why do you buy SILJ in your Roth IRA instead of individual stocks?
Yeah, that's a really good question. You can for the people who may not be familiar, SILJ is the Junior Silver Mining ETF. And some critics might say, hey, it's not really a junior silver mining ETF. It's more mid-tier and large cap stocks in that basket. But regardless, it's titled the Junior Silver Miner ETF. And personally, I hold that in one of my Roth accounts. So, the members know that. And the reason I do that is just really for simplicity's sake. In my primary taxable accounts, that's where I keep a basket of stocks. We own about 30 different stocks. But for the retirement account, just for the sake of simplicity, I own the ETF because, I wouldn't necessarily want to have a whole basket of stocks in the retirement account and then a separate account. And next thing you know, you have 50 stocks to keep track of. So just for simplicity.
Now, this viewer is also wanting to know, kind of, as you mentioned at the beginning, how you believe the silver market is manipulated, but you can still use technical analysis. And they're wanting you to expand on how can you use technical analysis on a manipulated market?
So there's several ways. Number one, know the levels that these institutional trading algorithms look at. And, the biggest input is probably the 200-day moving average, followed by the 50-day moving average. And then very clear horizontal support and resistance levels are obvious to these trading algorithms. Another tool I look at, it's called the Commitment of Traders Report. And I check that every week. And you can actually tell how these big banks are positioned. So if you get up to, like, let's say, a big resistance level and the banks are positioned heavily short, like they're positioned for silver to come down, and you're coming up against major resistance and you're technically overbought, that's a recipe for the bankers to kind of slam it back down. Now, conversely, if those bankers are bullishly positioned, as evidenced by the Commitment of Traders Report, and you've pulled back to key support, well, there's very good chance that support is going to hold. So just looking at that COT and knowing the inputs to the trading algorithms can really be helpful.
Now, with respect to kind of alternative currencies, we see right now that gold and silver are seen as alternative currencies. And we talked about at the beginning of this interview, there's this movement to move out of the financial system, out of traditional currencies and into precious metals, into specifically physical silver with the silver squeeze. Now, with respect to the silver squeeze, how much do you think of this movement we've been seeing over the last month or two is due to this movement?
Well, it's hard to quantify it and put it in exact, to measure that with any kind of objectivity. However, I mean, I'm pleasantly surprised. When this movement started back in very late January, I was hoping that this wasn't just like a flash in the pan. These buyers come in and then they leave and move on to other things. Actually, quite the opposite has happened. I've gotten to know some of those folks over at the Wall Street Silver, and that movement is just growing. They're not stopping, and it's relentless. And I think they have the right mindset, this group, that this is a marathon, not a sprint. So they're taking physical metal out of the system just on a regular basis. So, for those looking for like some kind of super spike, I think this is just continually putting pressure on the price. So how much of the price rise in silver is attributable to that? It's really hard to say.
And people have also looked at Bitcoin as an alternative currency, but there's some people have been shaken in the last week or so as we've seen Bitcoin fall to about 50%, to about 30,000. What do you make of the recent move in the cryptocurrencies, mostly downward?
Sure. And I like to monitor the cryptocurrencies. I don't have a strong opinion one way or the other. I mean, I'm very open-minded, and I do like to see my crypto friends making a lot of money in this previous bull market. But I just look at it from a chart perspective. And in the last few weeks, we had seen kind of this bearish, they call it a dome pattern. And that was signifying that we may see some weakness ahead in Bitcoin. And then, of course, we had that big spike down last week. And the big line to watch was the 200-day moving average. Well, we lost that 200-day moving average. Now we're rallying a little bit. And today, it's no coincidence. It just shows you the significance of these indicators. Price came up almost to the penny. I'm not sure exactly how close, but right there to that 200-day moving average before backing off. So we're back below the 200-day. If you're bullish on Bitcoin, the first step towards a technical reversal will be getting back above that 200-day moving average.
And what are the price points then you're looking at? That, I mean, if you are trading Bitcoin to get back into the market?
Yeah, so there's different strategies, right? I mean, when it comes to the precious metals, you can dollar cost average, you can wait for a technical reversal, You can scale in on weakness. These are all valid strategies, and everyone has to have their own personal strategy. But if you were waiting for a technical reversal, I would look for price to get back above that 200-day moving average. I don't recall exactly what that number is on Bitcoin, but we're right below it right now. We actually put out a trading idea over the weekend for a Riot blockchain. It's a Bitcoin miner, because that one is actually sitting just above its 200-day moving average, and that one popped I think it was like 14% today.
And again, with respect to precious metals, this viewer has a question regarding the kind of physical silver to own. They want to know, what form of physical silver does Steve recommend? Bars, rounds, coins, 3/9 silver, or 4/9 silver?
That's a good question, but a lot of people who are brand new. I remember when I first bought my first silver ounces back in 2000, I think it was 2008, 2009. I was all worried about what kind of silver I should get. The most important thing is that you get some. It's really not, you can't go wrong as long as you have physical metal in your possession. But personally, I used to accumulate only American Silver Eagles, knowing that there was the potential for those premiums to spike. And we've seen that. So right now, I don't buy Silver Eagles anymore at these kind of high premiums. Personally, what I'm doing here is buying 100-ounce bars, because the premiums, I can get them for 6 or 7% above spot. But I wouldn't necessarily start there. I would want to have some 1-ounce coins, probably look for generic rounds right now, because you can get the most silver for your money with the generic rounds. That's probably where I would look.
Joshua is wanting to know about Basel III and your perspective. Is it bullish for gold? And what about the supply and demand for gold and silver because of Basel III?
Yeah, it's a really good question. I've done some research on it, but to be honest, that's not my area of expertise. I've listened to Andrew Maguire talk about it. I've listened to several folks, and actually heard some people make a case that it's going to be bearish for the metals. Regardless, I think I'm always reluctant to rely on the banking system to be a bullish catalyst for the metals. It's almost like they'd be shooting themselves in the foot. But so all that to say, I don't really have a strong opinion.
And with respect to, what is actually bullish for precious metals, did you want to kind of walk us through maybe some of the key points that you think, or some of the key things that you think are maybe the biggest bullish factors currently?
Sure. So from a big picture perspective, and I'll mention this, your listeners are going to be very familiar with this, but if you're new, this is really the big picture bullish thesis, is that developed governments, U.S. government, all Western governments, they're in a situation where it is mathematically impossible to repay their debts and unfunded contingent liabilities. It can't happen with anything resembling today's currency. So they have two choices. They can either default, honestly, which they're not going to do. They never do that. Or they can inflate away the debt. So that's obviously what they're going to try to do. And for 6,000 years, silver and gold have been the prime beneficiaries of this exact kind of environment. Governments do this over and over again throughout history. And silver and gold always do a full accounting for the expansion of debt-based fiat currency. It just always happens. So that's the big picture fundamentals. Now, if you zero into what's happening right now, probably the most bullish thing that's happening is real interest rates are turning negative once again. And when we saw the big sell-off in gold and silver, a couple months ago, that was because for a brief period there, real interest rates actually went positive. And now we're seeing that reverse. So, and when I say real interest rates, what I mean by that is the rate of inflation is greater than the yield on the 10-year note. So if, let's just say for easy math, inflation is 4%, but the 10-year is 3%, well, you've got a negative 1% yield there. Those are obviously not real numbers, but that's probably the biggest input and the biggest bullish factor right now for the metals going forward.
Now, I'd like to just read this comment from a viewer. They say, buy what you can, get it at the best price you can. In the neck of the woods, it's scarce, and when available, it's expensive. And that kind of, I think, brings about an interesting point with this silver squeeze that we've been seeing. And really, it tracks all the way back to COVID. People, wanting physical precious metals, and it's becoming harder and harder to get. Kind of your perspective on that whole situation that we've been seeing.
Yeah, and that listener put it so succinctly. That's kind of what I was trying to say before, only he said it a little bit more articulate than I did. But yeah, I've been saying this for a long time, that if you don't have any physical metal, the moment you want it the most will be the moment that it's no longer available. I truly believe that day is coming where retail cannot get their hands on physical metal. Imagine living in Venezuela right now. Good luck going down to the coin shop with your or your fiat currency and exchanging it for metal. It's just not going to happen. So the time to get it is now. And another analogy is get your fire insurance before you can see this fire, before you can smell the smoke. And for those with eyes to see and ears to hear, we can see that smoke and that fire over the horizon, and it's unfortunately it's coming. So you're going to want some physical metal.
I think that's a good point, and also to have prudence as well, because it's not just like put everything you have into precious metals. Precious metals are insurance. I think first of all, it's not like a get rich quick scheme.
I do agree with that, and I think of physical metal as defense, mining stocks as offense. And from a big picture perspective, yeah, physical metal is insurance. However, I would kind of push back a little bit when I hear people say that and say, there are brief periods in the economic cycle, where silver and gold not only preserve your capital, but can greatly increase it. That's just what happens. And I think we're just entering one of those phases now. For example, if you look at like the Dow to gold ratio, I've got it up right here. Typically, bull markets peak around a 1-to-1 Dow gold ratio. So many listeners have heard me say this before, but in 1980, the Dow bottomed at 850, gold peaked at 850. So you actually made a lot of money. Your purchasing power increased by holding physical metal. It wasn't just insurance. But for the long term, when the metal I plan to hand to my kids and to their kids after that, that's insurance. But I think in this period of time, there's the opportunity for capital appreciation as well.
Definitely. Well, Steve Penny, we really appreciate your time today. If people would like to hear more about your work and really follow your work and really see what you're investing in, I think that's the biggest selling point for your newsletter, is that you're so transparent about exactly the trades you're doing and your whole portfolio. They can go to SilverChartistLiberty.com and sign up for that, and they'll be supporting liberty and finance along the way. Any last thoughts you'd like to add? And can you explain a bit more about your newsletter?
No final thoughts. I think we covered, we gave a good overview today. But yeah, as far as the newsletter, it's free. And our goal is to provide a ton of value for free. And then if you choose to go to a premium membership, that's fine too. We keep it really affordable. I mean, it's very cheap. And with the premium membership, that's where you get a fully transparent, over-the-shoulder service with real-time alerts. So every time I make a purchase or I sell something, I let our members know with an alert. They also get live mastermind calls, coaching calls, and things like that. But really, the free letter is the place to start. And, I don't spam you or hit you with high pressure sales tactics or anything like that. The goal is to serve you at whatever level you choose. So thank you so much, Elijah, for having me.
Fantastic. Well, the link is SilverChartistLiberty.com. Once again, Steve, thank you so much for your time today, and God bless.
Thank you, sir.